My good friend, Mr. Williams over here, often starts some of the discussions by asking whether you're a capitalist or a socialist.
As I mentioned, I think I've appeared before Congress 25 times and have mentioned every time I'm very much a capitalist.
I appreciate that, but I was curious, I would assume then that you believe the banking industry should be a for-profit industry.
Yes, and I think the banking industry is just as essential as our communications infrastructure, as our electric grid.
Mr. Chopra, the actions that are completely different, though, than what you say. During your tenure at the Bureau, the administration has spoken of or taken actions on banks' operating expenses, the fees institutions can charge, interest rate caps on credit, increased capital requirements, and of course, interchange fees, contracts between private entities, just to name a few. You even sought to increase your control over the credit reporting agencies and therefore who can get a loan. Taken together, we're looking at massive losses of revenue, loan and other credit losses, as well as very large additional costs of compliance. All of this results in higher costs and fewer banking services for customers and fewer financial institutions to provide those services, all the while giving the government more control over our personal finances. So it begs the question, at what point can we just publicly recognize that you and the administration believe that financial services should be a utility provided to the public by the government?
Well, nothing we have said has suggested that we want a lot of competing financial firms. And if you look at the profitability of the do you mind if I finish on this? If you look at the profitability of the finance industry, we've actually seen a way in which they have been able to be robust and create new products and new revenue.
Director Chopra, what's happening is the regulation is running downhill and choking the small institutions. You sit on the FDIC board, do you not?
I do.
You see the mergers and the continued consolidation of the industry, do you not?
We do review merger applications.
I just had a meeting this morning with Federal Chairman Powell. He talks about the consolidation. It's there. So it begs the question then, if you see this, what are you doing about it?
Well, we should have a discussion actually about consolidation, because there's a few places where I think it has driven. And one of the ways in which is some institutions get preferred cost of funding advantages because of perceptions about that.
So you recognize the problem. Have you taken any actions whatsoever to relieve the regulatory burden on small banks?
Well, one of the things we have done is tried to make sure we are making our supervision fit for the actual risks. We have shifted much of our supervisory resources to larger players.
Okay, you said on FSOC too, do you not?
I do.
Basel III is coming along. That is a detriment to all of the small businesses, small banks, and everybody else. It's going to hugely increase the costs. Can we get your support of trying to minimize the impact of that regulation on small banks?
So just to be clear, the proposed rule, as I understand it, that the agencies have proposed applies to banks with $100 billion or more in assets.
Director, I just got done talking to some banks, and they were telling me the regulator is saying, look, we know it starts at $100 billion up, but get ready, it's going to roll downhill. The banks are looking at it from the standpoint that if they don't comply with it, there's a wink and nod going on here with the regulators that we've got to be able to live with as well. And what happened is you're chasing consumers away from banks because banks are constricting services to the online lenders, offshore stuff, where it's not regulated. I want to quickly get to one more quick question I've got here for you with regards to a letter that I sent to you in the Department of Justice with regards to warning the creditors that unnecessary and overboard consideration of credit applicants' permanent residency status could violate the Equal Credit Opportunity Act, despite consideration that the criteria being expressly permitted under the ECOC's Regulation B. And I'm concerned that by what you're doing, you're adding a lot of confusion to the situation here. I know you addressed some of this a while ago, but I'm very concerned about the confusion here. We haven't got a response to our letter yet. And to me, it looks like you're in direct violation of the Know Your Customers law. Can you explain your position on that so it's not in violation and that there is no confusion for the...
Mr. Chairman, may I answer this? I'm out of time, but...
You got 4 seconds.
Yeah, may I answer?
You did everybody else. Go for it.
No, okay. I was going to say that, of course, the know your customer requirements absolutely are the initial part of the process. The Bank
is the
Secrets Act
law.
requires for a non-U.S. person to collect certain documentation about it. There should be nothing that is in conflict of it. The guidance that was issued explicitly allows the consideration of immigration status, but I take your point if there is confusion, and we will respond to you.
Well, if there's
under that
confusion, the law should take precedence, which is KYC, not your joint statement.
Oh,
And if you'll
KYC,
respond
of
for
course,
the
has to
if
be.
you'll respond for the record.
Thank you. I yield back.